Hi, I'm Hamlin Lovell, contributing editor of the Hedge Fund Journal. Today we're at the offices of AIMA talking about their enhanced Statement of Policy Principles, which builds upon the policy platform they first released back in 2009. We're privileged to have with us today Jiri Krol, the Deputy Chief Executive Officer and Head of Government and Regulatory Affairs at AIMA. Thanks very much for joining us today, Jiri. What are the consequences of a one-size-fits-all approach to investor protection regulation?
Well, the consequences are very simple and predictable. You will find yourself with only very narrow market segments developing, not just in the fund sector, but most likely in the overall capital market sector. As an example, you'd probably not have the hedge fund industry in existence if the 40 Act funds were the only possibility to conduct collective asset management in the United States. Similar in Europe, if we only had UCITS in its original form, not the more expanded or liberal UCITS 3, you would equally not have the hedge fund sector developing if there were no possibility to conduct asset management business under other regulatory requirements. So it is very important to ensure that there is, as a minimum, a differentiation between the retail sector of the market and the wholesale sector of the market, where greater emphasis on investor protection needs to be introduced in the retail sector, with potentially tools that are more intrusive, more prescriptive, and again, more limiting when it comes to the asset management possibilities conducted by the managers.
Right. And thinking geographically, what are the dangers of uncoordinated global regulations?
The dangers are, again, quite clear, and the policymakers are aware of them. I think the first and foremost danger is that we have fragmentation and balkanization, if I can put it that way, of the global markets. The capital markets have operated globally over the past decades, and that has led to a dramatic decrease in the cost of capital. So I think the very end result and the final consequence of fragmenting those markets would be an inevitable increase in the cost of capital at the time where the real economy has a need to find a substitute or a greater and more robust role for the sector, whilst the banking sector deleverages and finds higher level of capital for its operation.
In the search for solutions to create more consistent global regulations, could the European Union equivalence rules be extended?
Yes. That is one way in which you could deal with international and cross-border issues in the provision of services of various providers across those borders. Of course, there is not the only solution using equivalence, and equivalence doesn't necessarily have to be a solution. It can also be a barrier if conducted in a way which doesn't take account of outcomes and focuses only on assessing the detailed rules and whether the rules of a third country jurisdiction that is a candidate for being deemed equivalent and therefore allowing the service providers in that jurisdictions to cross borders into the EU. If the regulation is assessed in a very let's say rule by rule type of tick box manner, then we are likely not to obtain equivalence, and therefore the equivalence assessment is going to be an empty gesture. And this was something which we have had to contend in the IFMD regulation, where it was clear that using equivalence as a passport mechanism was never going to work, because the whole world had a very different standard of regulating hedge fund managers. And so we fought very hard for the preservation of the private placement regimes, at least in certain member states, because we felt the passporting mechanism wouldn't work. So equivalence is an answer but only as long as the process has a clearly defined goals which focus on outcomes as opposed to individual regulatory provisions, and as long as it's conducted with an open frame of mind, and as long, of course, there's somebody on the other side who has a similar understanding of how cross-border provision of services should work. So in the United States, for example, we have an approach called substituted compliance, which is slightly different, but in the end attempts to achieve the same result, making sure that cross-border activities can continue with potentially some overlap in regulation, but hopefully without an overlap that is not possible to resolve. So it's an overlap which doesn't place financial actors in a position where they have to choose between either between one or the other jurisdiction in terms of a breach of rules that is potentially the outcome.
Right. Another area where some people in the industry would like to see more global consistency is in reporting requirements, the growing amounts of data that need to be reported to regulators. Is there a common global standard for this reporting?
There isn't, and we believe that it was a historic opportunity missed. Hedge fund manager systemic risk reporting wasn't in existence until the FSA at the time started collecting certain data on the largest managers operating in its jurisdiction. When the regulatory push came along following the financial crisis, everybody agreed that it would be good to have a globally consistent and harmonized set of data reported by hedge fund managers so that we can have a global picture of what the industry is doing and have a tool to be able to understand how and whether there is a development in systemic risk coming from the industry, and crucially whether the industry poses systemic risk in comparison to other segments of the capital market. And because this was an area where reporting didn't exist previously, we didn't have the path dependency problem of existing systems being difficult to change. We felt it was possible to develop a globally harmonized standard. However, the timing inconsistencies and the difference in the institutional adoption of the various legislative and regulatory provisions have led to considerable divergence in some of these reporting standards, especially between the United States and the European Union.
So it sounds like regulations haven't been finalized in all areas. Which areas in particular do you think regulations need to be further developed or clarified?
Well, overall, we hope that we will experience a period of regulatory stability following the adoption of Dodd-Frank and associated rulemakings, and in Europe AIFMD and other measures related to the banking and the capital markets industry. But there are some areas where we feel could be developed further. Very narrow and specific areas related, for example, to the protection of client assets when it comes to segregation. We don't believe we're fully there yet when it comes to achieving full physical segregation as an option, for example, in the United States. And I'm talking about full physical segregation of collateral, which is posted as part of the central clearing transactions that our members engage in. Equally in Europe, there could be some further movement and clarification to the optionality given to clients to clear centrally under the full segregation regime. So this is one area where we continue to push for some further clarification, but it is going to be difficult. And it's interesting in the sense that this is one area of investor protection where we have not really received the same concern from some of the policy and regulatory community as we have in others. So if you think about how much the European policymakers have fought for investor protection in the area of depository liability, and how much of a fierce battle that was, and political capital was put into that, it is strange that in an area which is equally as important, if potentially not more, because here we're dealing with systemically important institutions, CCPs, and clients that that participate in them, we haven't received or seen the same level of concern being expressed. But overall, we don't feel that there is any major gaps in the regulatory framework that has been introduced or that is about to be finalized. So we hope very much that we're going to experience a little bit of a consolidation.
Right. Okay, well, Jiri Krol, Director of Regulatory and Political Affairs at the AIMA, thanks very much for your time, and we look forward to monitoring how AIMA's enhanced policy principles are manifested over the coming years.
Thank you very much.